finance will be done. So, ladies and gentlemen, please welcome Dr. Karel Snorres.
Okay. Very much. And good afternoon, everybody. So hopefully we have resolved some of the technical issues we had yesterday. So for our online participants, we did have some issues with sound quality yesterday. So if you are having difficulty hearing us, please do let us know in the chat, and we will look at that further. So yes, look, it's always a pleasure to be invited back to the centre here. I've been coming up here now since 2019, so that's 4 years. Every year we get to do some of these public lectures. We always get interesting feedback and good discussions about them. So yes, it's going to be a busy week. Well, can I have slide 1 of our deck, please? Okay, so yes, today is the first of 3. We're doing a general sort of survey, an introduction to environmental finance lecture today, and it's intended to be a fairly high-level survey of sort of the entire field. And then tomorrow we're going to get into a lot more detail. So take your choice as you go through today as to what from tomorrow's lectures might be of interest. Next slide, if I may. So yes, as Kun Sundarat mentioned, we've got this lecture today. The lecture notes, I think, will have been sent around. Have we sent out the slide deck? Yes, slide deck has gone out to the participants. The slide deck for today. Okay, so we will shortly be putting the slide deck for today into the chat for everyone. So feel free to read along. So the question might be, well, who am I to be talking about environmental finance? Why should you be listening to me? So look, I have a couple of dubious distinctions. I have the dubious distinction of being one of the first people in Australia to lose a fair bit of their own money trying to set up a carbon fund back in 1995 as a very young man, and it was a interesting learning experience about all the things that can go wrong when you are trying to do a carbon deal. I was then the Electricity and Environmental Markets Policy Officer for the Australian Financial Markets Association. So I did a lot of work for some years about development of data services and standard documentation for trading of renewable energy and carbon credits and all sorts of other things. I moved into academia and I was a founding director of the University of New South Wales Centre for Energy and Environmental Markets, and we did a whole series of research work around the design and operation, particularly of electricity markets, but also renewable energy markets and carbon markets and such. So I for example, worked on the design, the market design and implementation for the US Midwest Independent System Operator for the US market that runs sort of in the centre of the states. I left academia, or left full-time academia, to become a director of the then newly established Macquarie Bank climate change team. So I spent 8 years with Macquarie Bank handling a whole series of transactions related to anything that had some kind of a green angle to it. And I was seconded from Macquarie to be the CEO of a brokerage business that was at that time Australia's largest brokerage of wholesale electricity and environmental products. Yes, look, I've been on the sharp and pointy end of doing these deals. I left Macquarie about 10 years ago. I think that firmly makes me a recovered banker. And today I am juggling 3 roles. So firstly is my visiting role here with the centre. And as I said, it's always a pleasure to come up to Thailand and do lecturing and interact with the students here. My other 2 roles, I work in a company called Atom Consulting, and you can see at the top here my 3 colleagues and myself. We do a range of consulting work around energy, environmental markets, natural capital accounting, cost benefit analyses, these sorts of work, anything that's again got a sort of enviro flavour to it. In particular, we've got we're doing some work with the New South Wales Department of Environment. They've had us on retainer for the last couple of years, advising them on a whole series of environmental finance initiatives. We've just recently been awarded a ongoing contract, or approximately a 4-month initial contract with the Australian Grains Research Development Corporation. So this is the peak government body in Australia for looking at how to facilitate the grains sector, and we're doing a whole lot of work with them about what the growth of environmental markets for carbon, soil carbon, these sorts of things might mean for a major grain producer, given that Australia is in fact a substantial grain exporter. My other role is as a co-founder of Skander Partners. You see the 4 of us at the bottom there. Skander Partners is a bit quiet in that we have not formally launched. We are a biodiversity and carbon funds management investment group. We're in the process at the moment of launching, so that's very early days. Something of a coup, in fact, for the people here to hear about that, because I think this is one of the first times we've actually publicly mentioned that Skander is coming along. So yes, that would be, that's my pedigree for this. I've lost money in this space, and hopefully, coming from the talks we're doing, the listeners won't lose money because you'll have heard the mistakes from me. Okay, next slide. Now, you might then say, why is this relevant in Thailand? And one of the great things, one of the exciting things in this space is that there's always new things to look at. And so today's lecture, repeatedly, I will be showing things that have been released like within the last week or 2 weeks. There's always things happening. But just to show why this is important to an audience in Thailand, I have here an interesting public announcement that came out 15th of June, so about 2 weeks ago, announcing a green and blue bond issuance by a local bank here in Thailand, Krungsi. I have absolutely no connection with any of this, by the way, so there would be people probably in the audience today who know far more about this particular deal than I do. I only know what is public, but I thought it was an interesting one to put up. We're not going to get too far into this today, partly because there's not a great deal of public information, but also because today is intended as a survey piece. But we will have some discussion in the session tomorrow about some of the specific sorts of things that you could imagine a fund like this might conceivably be looking to invest into. But yes, this particular bond, as it's been announced, $400 million US dollar, one presumes, green and blue bond. We'll come to the meanings of green bonds and blue bonds in a moment. Issued by the local bank and backed by the IFC. The IFC being part of the World Bank Group. Okay, so what little do we know about this as a project? Next slide, please. So here's what was announced on the website. 7-year green and blue bond, 400 million, issued by Bank of the India or Krungsi. 50 million of which to be dedicated to supporting blue assets, and we'll come to a moment to talk about what that might mean. But yes, I thought I'd start with that as an example of deals that are going through currently and why this matter is worthy of some attention. Okay, now I'm also conscious in a forum like this, the great bulk of the people listening to me are actually online, and normally, of course, when lecturing, you get some interaction and questions get asked. If you've got questions, I'm actually happy to field questions at any time. Feel free to just put questions into the chat, and we'll keep an eye on them. But I will stop periodically anyway, just to ask if there are any questions. So let's roll forward. Next slide. Okay, so what are we doing today? Quick overview of the field. What is environmental finance? How is it different to any other sort of finance? A quick review of some of the key terms, the products that are out there, what they mean, and some commentary from me about the key developments and what I think that might be implying for the future. It is a very rapidly evolving area. So we're not going to be getting into detail. Today is not a day for doing detailed net present value calculations or any maths or anything. It's very much intended as a survey piece. Okay, next slide. All right, now I mentioned that the world is moving very quickly, and here is another very recent thing. This was released yesterday, 26th of June, 2023. These are the new accounting standards that are just being released. So this sits under the global organisation that handles accounting standards. They have a affiliated group known as the International Sustainability Standards Board, and they have just released two documents: the General Requirements for Disclosure of Sustainability-related Financial Information. So that's a disclosure about how to release information that is material, and IFRS S2 climate-related disclosures. Now, I am not myself an accountant, and one of my colleagues at Addon Consulting is much more across the detail of the application of these sorts of standards. But the point that I would make is that whereas even just a few years ago, it was all very voluntary and it was all very unknown as to how one might account for environmental issues on the balance sheets of companies, all of that is firming up very rapidly. So again, I'm sort of reminded here of when I first joined Macquarie back in 2007. So more than almost 18 years ago now. It was considered quite innovative to be looking at financing a solar farm. Of course, by the time I left Macquarie 8 years later, financing solar farms was just routine. It was what people in utilities teams did all the time. This area is the same. Whilst it is considered quite boutique today to be looking at how to apply accounting standards to questions such as the value of natural assets, it is clearly not going to continue to be boutique. It will be the mainstream. It is rapidly becoming mainstream. And some of the work we do tomorrow, where we talk about the task force for nature-related financial disclosure, I think will simply emphasise how rapidly the frameworks are evolving. So I simply mentioned that one. It's on their website. Again, if you are in the finance sector, this is certainly something that would be worth taking a look at. Okay, next one. And again, a teaser for Thursday, for our lecture on Thursday. Thursday is particularly going to be discussing three recently released IEA reports. So again, same story, lots of stuff coming out every day. International Energy Agency has just released 3 reports regarding the global transition of the energy sector. This particular one is a particular relevance today, scaling up of private finance for clean energy in emerging and developing countries. Well, for us here at the JGSE, that's us. So lots of interesting stuff in this report, and we'll be discussing through it in some detail on Thursday. But notice that it quotes there some very large numbers. Financing instruments such as green, social, sustainability and sustainability-linked bonds, GSSS, have the potential to mobilise private capital at scale. Today, there is more than $2.5 trillion in ESG funds, and so on it goes. Now, by the end of this lecture, hopefully, some of those buzzwords will be clear for those of you that aren't clear to them. But again, Thursday, we'll go through these reports and well worth a look in your spare time. If you have trouble sleeping at night, I commend these sorts of reports to you. Next slide, please. Okay, so here's the one page, environmental finance in a page. One page, I've deliberately tried to cut it down. So the first thing you hear in that Krungsy example that we started with sits in this category is debt that has been issued that is defined by the use of proceeds. So this covers green bonds, blue bonds, and green loans. What does this mean? It means that the bond, which is simply a way of issuing debt into a normally publicly traded market, or can be privately traded, but publicly traded market is the largest one, where the money that has been borrowed is being used for some explicitly green purpose. So what's the classic example? If Krungsy said, we have raised $400 million, we've borrowed $400 million by issuing a bond, and we will be spending all that $400 million on financing solar farms, that would be considered a green bond. So it's a use of proceeds test. Okay, the test there is not that it's performed particularly well or badly. It's simply what it is that you're going to put it into. So the question would arise, who gets to choose what counts as green? And certainly early on in the process of these sorts of bonds being issued, it really was something of a free-for-all. Green was whatever people said was green. So you saw people issuing green bonds where the use of proceeds was building a railway. Okay, well, green railway, well, it kind of depends on what exactly you're doing with the railway. So these sorts of issues have now been sorted out somewhat. There are now a number of taxonomies that are issued that allow you to determine whether something will be generally considered by the market as being green. And we'll come to those in a moment, the taxonomies. Blue bonds, and that Krungsy one we started with explicitly talks about being a blue bond. Blue bond is a similar use of proceeds test. It's where the money that has been raised is going to be invested into things that somehow relate to the marine environment. So we're talking blue carbon projects where you are perhaps restoring, or in the Australian context, often relates to mangroves, doing something to protect mangroves. Mangroves actually put a great deal of carbon into the marine, into the tidal areas of the marine environment. It can also mean things that are protecting coral reefs, things that relate to sustainable fisheries. There's a few other. So blue bonds basically means marine environment in some ways. Green loans, closely related to green bonds, the difference there being that rather than issuing a bond, you are writing loans typically to a retail client base that explicitly relate to some green activity. So one of the classic examples in the Australian context would be a company called Bright. They provide slightly concessional interest rate loans for people who wish to put solar panels on the roof of their house, or high efficiency hot water units and such. So we're talking relatively small loans, but that are all dedicated to doing things that relate in some way to energy efficiency or environmental outcomes. And as such, the question arises, well, where does the company that's lending the money get their money from? Well, they get their money from having issued a green bond. Right? So what you've got is green bond in, then green loans out. And that again meets the use of proceeds test. The distinction to draw is debt that has got both a use of proceeds and an achievement threshold of some sort. So in this category, we've got social impact bonds and sustainability linked bonds. So the way that this works is that the debt, the bond, not only have you said, yes, I'm going to use that money to build a solar farm, but that the structure of the bond has got some form of monitoring and evaluation on it. So that it might, for example, say something like the interest rate payable on this bond is 4%. So that's the amount of interest you're having to pay for the money you've raised. However, if you demonstrate that you have in fact successfully installed so many megawatts worth of solar, the interest rate will drop to 3.5%. So there is some metric of achievement triggers some change in the underlying economics of the bond, and that's known as a sustainability linked bond. There's a whole variety of ways that linkage can be done, but the idea there is that yes, there's some form of monitoring and evaluation that is occurring. Social impact bonds are a similar sort of idea, and in fact, they are the older flavour of this. So the first social impact bonds, of which I was aware, were actually to do with prisoner recidivism. So this is when people leave prison. There's a fairly high likelihood that the person who has left prison will end up back in prison. Prisoners being the sort of people that they are and having the sort of interesting collection of personal problems that many of them do. So the idea was to try and, on behalf of government, was to try and introduce innovation into the problem of how to deal with prisoner recidivism. So what they did was they said, look, here is a grant of money, which will be paid if you can show that you have successfully run a program and you've successfully shown that you have kept a certain number of prisoners out of prison. And then you get the money paid to you by the government. So that was known as a social impact bond. The definition has broadened somewhat over time, but the core essence is the same, which is that there is some nominated social goal, and it has to be quantifiable and independently measurable, and that the achievement of that goal in some way affects the interest rate or terms on the loan. Okay, so that's our social impact bond. So that's the debt side of things. Now, in terms of sheer volume of money sloshing around, those things we've just gone through: green bonds, blue bonds, green loans, social impact bonds, and sustainability linked bonds. That is the big sort of bulk of it in terms of dollars, because debt markets actually just generally are bigger than equity markets. We've then got the equity side of this. So we've got a couple of things here. We've got ESG ratings. So this is where some sort of assessment about the environmental, social, and governance performance of a company or fund is being made. And we'll come into, for a moment, some of the difficulties and controversies about doing that. Those of you that watch the news would be aware perhaps of various attempts in certain states in the United States to ban the use of ESG criteria when making investment decisions using public funds, for example. So the use of ESG ratings is not entirely without its critics, and we'll explore a little bit why that might be the case. And then we've got some specialist things we see come through. So there's biodiversity funds. They come in a range. There's some which are simply putting some kind of biodiversity impact screen over the top of their general investment decision making as a fund. There are others that are actually explicitly looking at buying areas of land, putting those areas of land under conservation and selling the resulting credits in some way. That's where you are in a position to define a credit. And the question about how to define biodiversity credits is another interesting one, and we'll come to that slightly later in the lecture. We also have a group here that are variously known as impact investors. Now, again, this is a term that has a rather flexible meaning. Impact investors can mean a few different things. There are some impact investors for whom it simply means that they are still expecting a fully commercial rate of return, but they are putting some sort of impact lens across their decision making. So they might say, look, I've got 10 different projects that I can invest into. They all will pay me 15% per year. One of them, however, happens to relate to improved education outcomes for young women. And so I will choose that one. Okay, so that's sort of one end of what impact investing means. They're still looking for a commercial return, but they're also looking to achieve a social impact. At the other end of the spectrum, we're talking philanthropic groups who actually are not looking for a commercial return at all and are investing primarily on the basis of achieving some some impact. Now we actually find here both those groups being referred to as impact investors. So if you hear the term, you need to sort of say to yourself, well, what exactly is it that I might be dealing with here? Okay, so with that quick romp through, let's get into a bit of detail on them. Let's skip forward. Okay, one of the things that often underpins any form of investment where you're trading off an environmental impact for a financial impact is, well, how do you attract investors who are looking for a commercial return if they're going to be doing something that inherently involves reducing their returns? So this raises the context of blended finance. Blended finance simply means, I've taken this, by the way, from one of these IEA reports that we will be discussing in detail on Thursday. So blended finance here simply means that as well as having an investor who is looking for a fully commercial return, you have combined their money with money from someone or some group who are not necessarily looking for a fully commercial return. So this might be a multilateral agency like one of the United Nations development funds. It might be philanthropic money, but the point is that they're not looking for the full commercial return, and hence you can often use them as the first line of risk in conjunction with fully commercial private money, and this is known as blended finance. Okay, next slide. Okay, and this comes to our point about who actually is putting money into things. So again, we've got a range of investor types. We've got investors who are looking for market returns, so private companies of any sort, commercial banks, institutional investors such as pension funds, sovereign wealth funds, and other asset managers. Now, that is almost by definition the bulk of the money that's out there. You know, the way the world works, and indeed the way the world works for probably everyone who is in this room and seeing this lecture, is that you want to retire well. You want the money that you are giving to your pension fund to be invested such that when you are of age to take a pension, that there is a good amount of money there to spend. And every time that you are saying we are going to do something that is some commercial, what you're really saying is I'm taking someone's pension and I'm giving them less money to retire on than I did before. So you often will find that these groups are very focused upon ensuring that they are getting a good return for the money that they are investing, and I would say that is the correct focus for these sorts of groups. We then have a number of groups such as the multilateral and agencies. So we've got national development banks, things like the ADB, Asian Development Bank, IFC, National Finance Corporation, some of these World Bank, groups. We've got impact investors who are seeking a return, but not necessarily a fully commercial return. And then we've got groups that are happy to take below market rate returns, but there's obviously a relatively limited amount of money in this case because it is essentially philanthropy of one sort or another. So one needs to be, use that money with the maximum possible impact because there's not going to be a lot of it around. Okay, skipping on. Right, so a few useful little links that I put here. I've tried to give a selection of links in this presentation for people to refer to. You'll be pleased to know that I have no financial involvement with any of these groups. Environmental Finance magazine has been around for quite a long time. I recall reading it early on in my days at Macquarie back in 2007, so it's been around at least that long. It's an expensive subscription. From memory, it's like £1,000 a year for a subscription to it. Don't quote me on that, but it is expensive. They do have it is possible from memory to do a free trial version for a month or two. And if you were just looking at getting a feel about the space, if this was a new area to you and you wanted to sort of see all the things that were going on, you could do worse than signing up for the free trial period on Environmental Finance magazine and just reading all the stuff that goes through. I would commend that as actually a pretty good way to get a sense of all the stuff that goes on out there. A couple of other groups, and I could have done 3 pages of links, but I just chose a few. The United Nations Environment Program Finance Initiative. I've got a clip of their website up here. Again, very useful resource, links to a lot of different things. I know that they happen to currently have up a fair bit of stuff on their site regarding the Task Force for Nature-Related Financial Disclosure, which is the topic of one of our lectures tomorrow. And that, I think, emphasises the point about the importance on a global basis of the work that the TNFD is doing. It is, in my view, against strong competition, probably the most significant thing in the entire sector of environmental finance in the last 10 or 15 years. It is going to have very significant impacts on how money flows around the world. So if you haven't heard of the TNFD, you certainly will have before you've gone too far into the future. The EU has, I'm coming back to this point I made before, that as to who gets to choose what is a green bond and how green is my bond. The European Union has released a fairly comprehensive, or is in the process of releasing a fairly comprehensive taxonomy about this, and they are requiring that funds that market themselves to EU investors claiming to be in some way green, that they have applied this EU taxonomy and these tools to assess how green they really are. By no means a finished product. From memory, they are looking at having the first version of this actually in full production early next year, if I remember rightly. But it's certainly interesting to see the work that they're doing. The UK Green Finance Institute also has some very interesting case studies on it. If you wanted to say, well, show me an example of a particular blue bond project, how exactly does it work? Who did what on that project? Who provided the mezzanine finance, etc. They've got some interesting case studies on that site that you can work through in detail. So I just throw all that to the interested reader, if I may. Okay, quick mention here today of the Task Force on Nature-Related Financial Disclosures, and as I said, this is actually the subject of an entire lecture tomorrow, so we're not going to get into it in any detail now, but at core, it is a group of major banks and major corporates. They claim to represent $4 trillion worth of assets. It's quite a lot. Who have got together to come up with a single consistent framework for how to report, measure and disclose environmental risks or nature-related financial risks, as they refer to it. Now, as I said, we'll be discussing that tomorrow, but to make a very complex and multifaceted thing extremely concrete, because I am a simple man and I like a simple concrete example. If a fund were looking at investing into a new copper mine or gold mine, what sorts of nature-related risks should they be attempting to quantify and report and think about? Okay, now again, those of us that are in this part of the world probably remember the difficulties that BHP had with the Ok Tedi gold mine in Papua New Guinea. It was a huge ongoing scandal because they had gone in and built a copper and gold mine, and it proceeded to leach cyanide-laden wastewater into the local rivers, and it killed all the fish. And then there was an armed insurgency, and the government got involved, and lawsuits, and there was a whole mess. Right? It went on for years and years and years. So the question would be, if you're an investor and you're looking at investing into a mine, how do you preemptively find and manage against those sorts of disasters happening to you. That is essentially what the TNFD is about. It's a very extreme example, one of that mining example, but it's that kind of thing. So have that in your mind as to what this thing is trying to do. As I mentioned, I think, in my personal opinion, that this is going to be one of the most significant things that alters where investment flows on a global basis. It's going to have some very big financial impacts and significant changes in investment flows. That would be my personal view. Okay, next slide. Okay, so we're about to start getting into a bit of detail. This might be a good moment for me to quickly check. Have we got any interesting chat or questions coming through? Anything in the chat, or no one is listening to me? Oh, no questions. I must be doing a wonderful job. Considering.
Is this supposed to be done before or
okay, so the task force members on the TNFD are a mix of financial institutions and private companies, and they are developing the framework such that it can be applied both for at the corporate level of banks, who are obviously doing a series of transactions all the time, as well as by corporates who are both wanting to report their overall exposures, plus the exposures that adhere to any specific project that they might be looking at. So when we get into it tomorrow, it's intended to be that it sets some high-level overarching principles and then leaves the detail to be decided by the individual companies. So depending on what sort of projects you're doing, you could choose as a company at what point in the chain you're going to apply the framework and report things up. So it's a bit horses for courses. I am just going to grab a water for a second. Excuse me. Okay. Did we do something? Or was that a question from Common Gun?
I was just wondering whether venture capitalists would be into one of these green finance.
Sorry, I couldn't hear that question clearly. Could you make that up?
I was asking whether venture capitalists come into the environmental finance.
Yes. Okay. So an excellent question about how this applies in the venture capital space. So at the first level, venture capital funds are financial funds just like every other fund. They tend to be a bit smaller in terms of the quantum of dollars that they're handling, but nonetheless, they are financial institutions. I'm not sure off the top of my head whether there are any venture capital groups that are actually members of the driving TNFD task force, but you could, I think, reasonably assume that they would be looking at applying the TNFD principles across their portfolio. And one of the reasons I say that is because the finance institutions that are members of the task force, and we're talking big names here. We're talking HSBC and BlackRock and large groups. They have been very explicit that they are looking to see similar reporting flowing up from the investments that they make. And of course, the venture capital funds get their money from investments that have been made by some of these other groups. So at least some of them would be saying, well, come on, we want you to apply these principles and report up in a consistent way. One of the other interesting things that we've got coming up on the Thursday lecture, when we work our way through these IEAs and through these IEA reports that have just been released, they've actually got in there some interesting statistics about where venture capital has been being invested in the last couple of years, at least in respect of environmental and energy transition sort of issues. And we're actually seeing quite a movement in the sorts of areas that venture capital has actually been investing money. So that's a teaser for coming and turning up to the Thursday lecture, where we will show that. But yes, in short answer from Lyndon, yes, I think they will, albeit that they're not forced to.
Thank you.
Any other questions while we're
question about sustainable and sustainability link.
yes.
The difference in the two.
Okay, so this is again like the use of proceeds test versus a use of proceeds with achievement test. So a sustainability bond might just be saying, look, the use of proceeds is that we are investing into, choose your favorite, sustainability related thing. We're investing into improved cattle farming techniques. Okay. A sustainability linked bond would say we're investing into improved cattle farming techniques, and in the event that we can measure that we've had a certain impact, the interest rate or other commercial terms on the bond will be changed. So you might say, if we can show that we have successfully reduced methane emissions from that cattle herd, the interest rate on our loan will be reduced by 0.5%, something like that. That would be a sustainability linked. So the word link is to imply that connection between money being spent and actual measured, achieved impact. Now you might say to yourself, well, why aren't they all linked? Surely if I'm investing money, I want to see I've achieved something. Why aren't they all linked? And the answer is that often it's very hard to exactly identify what the environmental sustainability impact is going to be. And then it's even harder to measure it in a verifiable, objective way. One of the issues here, of course, is that if you link a large amount of money to the achievement of a particular target, there is a great deal of incentive to be stated to have achieved the target, regardless of whether you have or not. So there have been some unfortunate cases about, how realistic the achievement of the target is.
It's like you try to compare between global and the China, the share of China with the rate of.
Okay, so thank you, Anita. It is an excellent question. So on this particular slide, I have no, let me start that somewhere else. It is always interesting to look at the statistics that come from different agencies measuring supposedly the same thing. They can sometimes be remarkably different. So in this particular case, I have taken here a graph from, again, one of these IEA reports, International Energy Agency reports, which we're going to be looking at on Thursday. So that particular IEA report is regarding scaling up private finance for clean energy in emerging and developing economies. The point that IEA report is making is that China represents a very large fraction of everything that's happening in terms of finance for clean energy in emerging and developing countries. And that's why they're splitting it out in this particular case. So the thing to look at here is the graph on the left, which is global issuance of all sorts of green sustainability and sustainability linked and social bonds, GSSS. So that's a global number, and they've suggested there in the order of, let's say, about $1 trillion of bond issuance, US dollars of bond issuance in 2021, 2022, with a decline during 2022. And then the graph on the right is suggesting that about 140 billion of that was going into emerging and less developed economies. And there's a list they provide about that. Other thing to notice there, I'm looking at the graph on the left, they've split out the green bonds, the social bonds, the sustainability and the sustainability linked bonds. So you can see by far the largest share are green bonds. So that is a use of proceeds test under one of those taxonomies that we referenced. They said we are going to use this to invest into X, and X is accepted under that taxonomy as being green, and therefore it's a green bond. Okay, that's the bulk of it. Social bonds, same thing. We're investing into often it is education infrastructure. We're investing into building school buildings. Okay. So that's what those two are, and then we've got the sustainability ones sitting in there as well. So you can see that green is by far the single largest category at the moment. And yes, again, don't want to digress too much into this, but we'll discuss it on Thursday when we look at this financing of clean energy in developing countries. 50% of the issuance in all, taking all developing economies together, 50% of the issuance last year was in China alone. So clearly, the Chinese economy is a very significant part of what goes on. Again, I've referenced a couple of useful guides. Should anyone in the audience be, a young banker who takes it upon themselves coming out of this that he or she would like to issue a green bond, there is a step-by-step guide on how to do that, called the Green Bond Handbook. It's actually published by the International Finance Corporation, part of the World Bank Group, IFC Group. I've provided a link to it there. That particular version of it's actually available for free from the Environmental Finance website. So yes, if you would like to explore in detail how it's done, I commend the handbook to you. Okay, moving on. All right, so here are some other numbers, which are slight. This is from the Environmental Finance, data, which is a sister company or an associated company of Environmental Finance magazine. One of the great things about Environmental Finance magazine is they do have an extremely good database where you can actually go in and interrogate and find out where the money is going. So they have recently, so this is again June 2023, so this month, suggested that total issuance in green bonds cost $4 trillion US. So again, we are seeing strong growth. Now, the reason I point that out, can we swip back one? You compare that to the dip we saw here. Now, the environmental finance data is showing like continued strong growth up here in 2023. This data doesn't go to 23, but it kind of suggests it's sitting up there somewhere. So again, it's often a good idea to compare data sources. Okay, going forwards. And what else do we take from that? Look, I think in terms of breakout, it is showing a similar story to the previous data set, which is that the great bulk of it is green bonds, which is to say bonds that meet something in the taxonomy. It could be railways, it could be energy efficient buildings, could be schools. I note that a recently issued green bond in the state of New South Wales, from memory, 50% of that bond is hypothecated to building a train line, as in an underground suburban train line. So green, you might say, yep, well, how green is my suburban train line? Is that really what I thought green meant? Yes, it does. That is exactly what it means in terms of this sense. Okay. So a quick note here about what actually is a bond. I'm conscious that some people listening are not hardened financiers who think about bonds all the time. A bond is simply a standardized form of loan. It simply means a loan that is paying where you are under an obligation to pay a certain amount of money back to the person who has invested into you every month or every coupon period. Pays a regular amount of money every period, and then at the end of the period, the balance is repaid to the investor. It's simply as that. And then these other things are simply referring to how that's paid. So all of these things are essentially the same thing. There's a bit of detail about how exactly it's structured, but that's the core thing. And when someone says bond, think loan. And it just means loan. Okay, skipping. Right. I mentioned the EU sustainability taxonomy, so let's explore that in a little bit more detail. So I've provided the reference down there for the details of this taxonomy. Expected to apply from early 24. It includes a great many things. It's actually a very comprehensive taxonomy. It's got page after page after page of detailed writing about what exactly they view as considering to be green or otherwise. It has been rather contentious on occasion. There was a bit of news coverage some months ago when they announced that they were going to include investments into nuclear energy as being inside the green bond taxonomy. Now, again, speaking as an economist and a former engineer, I actually can see that argument. You can see that if your concern is global greenhouse emissions, it probably is quite legitimate to say nuclear energy reduces greenhouse emissions, therefore it's in. Clearly, that's not a position that is necessarily universally accepted, particularly by anti-nuclear activists. So again, it comes to this interesting question that these taxonomies and the choices about what exactly is in or out is by definition raising social issues, raising social license issues. We should always have that in mind, I think. They particularly mention the use of biodiversity credits, and we're going to come back to this question of biodiversity credits in a couple of slides' time. Unlike carbon credits, where we've had quite a period of development and now it's a reasonably well-established space, what forms a carbon credit, biodiversity credits are not so well established, with a couple of isolated examples. We're going to discuss in a moment the New South Wales biodiversity offset scheme, which actually does have quite a robust credit framework under it. From memory, there's only 2 other schemes anywhere in the world that have got that kind of level of robustness to them in terms of biodiversity, but it is a rapidly growing space and rapidly growing for reasons that we'll discuss in a moment. But interesting to me when I was reading that taxonomy to note that biodiversity credits had already been put into the taxonomy. Right? I thought that was quite an encouraging sign. As I mentioned, the European Securities and Markets Authority is going to be requiring the use of the taxonomy for those that are claiming that their investment products are in some way green or ESG rated. So again, I think the interesting thing to note here is government moving into what has historically been a bit of a free-for-all, a bit of a free Wild West as to what counted as green. Government is now very aware of it and is in there. Similarly, European Banking Authority, so again, this is a regulator for the banking sector, is moving in terms of producing guidelines in respect of green loans. So really, I think the 2 points that I'd take out of this is that the taxonomy exists, it is working its way forward to formal launch, and that we are seeing an increasing tightening up of regulation around this space. Okay, right. I've clipped here a bit of stuff from their website about what that taxonomy is. So what is it? It's a classification system to define what is environmentally sustainable activity. Now, that is obviously at its core partly science, but partly also subjective. As that case with nuclear energy makes clear. It has some tools with it. They claim that it is technologically neutral. How accurate that is open to a little debate, I think. But the core idea there is to try and design the taxonomy to be outcome focused rather than looking at the technologies you choose to get there. What they claim it's not is a rating of the greenness of companies. Well, actually, that's probably exactly how it will be used by at least some of the groups that seek to use it. Does not make any judgment on the financial performance of an investment. And this is you might think is self-evident. The correlation, people sometimes claim, when you hear certain groups, people claiming that there is a strong correlation between ESG performance and financial performance, or between green performance and financial performance. I have to say personally, I find those arguments good in parts. To find that correlation, you need to be reasonably selective about what things you look at, particularly in the last couple of years. And again, we're diverting slightly here, but when you see these sorts of statements being made, one of the things that happened in the last few years is that many ESG funds went quite heavily into tech investments. The logic being that if I'm investing into Google, then I'm not investing into tobacco or arms manufacturing or another list of things that they didn't want to get into. So a number of these, quite a surprising number of these ESG funds became, in effect, tech funds. And whilst the tech boom was on, they did really well, and everyone was saying, oh, look at this great correlation between ESG and financial performance, whereas actually what it really was a great correlation between tech funds and financial performance. Then, of course, tech funds weren't going so well, and therefore suddenly all that correlation with ESG funds broke down. I'm going to throw up a list in a minute of a set of biodiversity themed funds, and we note that last year on average they lost 10%. Okay, so again, if people are claiming that, it's worth asking them what exactly is the nature of the ESG screen that you're claiming to see that correlation. Was there a question that came up there? Okay, what have we got? I believe environmental finance will only work for those companies that apply strictly a polluter pay principle. How can purchasing green and private companies be made attractive to those operating in least developed countries? Okay, so there's a couple of things I'd like to unpick here. One is about the definition of green bonds. So as we've said a moment ago, a lot of bonds that are issued as green bonds are bonds that would have been issued anyway. So that case of the New South Wales government. New South Wales government wanted to build a new train line. They issued a government bond to raise the financing to build the train line. It so happens that under these taxonomies that have now developed, building train lines counts as green, therefore it was marketed as a green bond. They would have done it anyway. So it's not in the case like that you are requiring a revenue stream to finance the green bonds coming from a polluters pays kind of license. In that particular case, you were going to pay for that bond from the current state government revenue that was going to be presumably raised from charging tickets for the person using the trains after they were built. The polluter pays part of it, which is raised here, and this is an interesting point, relates to being able to raise a revenue stream from something like a national cap and trade carbon tax, where you might have said let's say we imagine, and I dare say we won't, but let's say we imagine that we were going to put a a carbon tax across all generation companies in Thailand, and that they were going to have to now pay a $20 a tonne tax on every tonne of carbon dioxide that they emit out the top of their stack. And that you then say that those companies could then say, right, well, we're going to issue a green bond to raise money to invest into more efficient generation technology, which will be paid for through the reduction in the carbon tax that we're having to pay. Now, that would be a mechanism that would work, but it is not the only mechanism that works for these. So, yeah, I think on the question here, I think it rather depends on what the nature of the thing that's being invested into is, and how the associated revenue stream to support that loan, it's a bond loan. So obviously, if you're raising money, you have to have a way of paying for it. So whatever that revenue stream is, there's a number of places you can get it from. It doesn't have to be coming from a polluter pay type arrangement. Okay, any other questions coming through there? I'll use that as an excuse to take another slurp of water, please excuse me. Okay. No further questions. So we will roll on. Next slide, please. Okay. Now, I've thrown this one in as just to demonstrate that there's a lot of different criteria out there. So this is a different taxonomy and a different set of certifications. This one's done by a group called the Climate Bond Certified Group. Really, I'm just putting it up there to show that there's multiple certifications and such that are out there. You can see that it's actually hard to read. I'm sorry, I should have put this at higher resolution. But basically, they are showing the various different sorts of bonds along here and what they count. So this one says, for example, solar, wind, hydropower, various other things, and whether or not they fit into their taxonomy. Not going to bother going through it in any detail in this lecture, but the reference is there, and it's interesting to compare the taxonomy that's being used there with say the EU taxonomy or some of the other taxonomies that are used out there. So it's really just there to demonstrate that there's a number of these around. Okay, good. Okay, now since we started this lecture with referencing that Krungsy blue bond, thought we might explore for a second about what blue carbon is and what blue bonds are, and the range of things that might cover. This is a matter a bit close to my heart. I've just been for a client. I've actually just been looking at the potential to create a market for marine biodiversity. So yes, we've been looking rather closely at marine ecosystems and marine finance just recently. So it's an interesting one. The term gets used in a few different ways. So the narrowest definition refers specifically to carbon that's associated with mangroves, seagrasses, and tidal salt marshes and seaweeds. So it's quite a tight definition. But I think these days it is more broadly taken to mean carbon captured and stored by coastal and marine ecosystems, including all fluxes and stores that are biologically driven. Okay, well, what does that mean? Well, that includes coral reefs, it includes seaweed, it includes all sorts of stuff that is happening in the ocean. The interesting thing also with this is that a surprising amount of what goes on is actually going on in a fairly narrow strip of the marine environment, which is to say the bit that's right next to the shoreline. And there's a lot going on in that direct sort of marine area. Yes, it's a rather complex area. Now I say it's complex here where here the blue bonds are simply debt raised to pursue some kind of projects that generate blue carbon or other positive marine impact. Now, again, this comes to this problem about the taxonomies. The taxonomies, to this point, largely do not cover marine ecosystem stuff. And that's partly because the science is much harder to come across about what exactly the impacts are that you're achieving. Now, that said, what science there is suggests that the impacts are potentially very large. So I don't think there's any doubt that we're going to see a continued rise in blue projects of one sort or another, because it's actually a very important part of the ecosystem, as you might expect. You know, the oceans are, after all, 70% of the Earth's crust. But at this moment in time, the taxonomies are less developed, and the science is less developed. And if anyone is listening and you happen to be an enthusiastic graduate student looking for a fun PhD topic to do, PhD topics that sit around the science on how to measure carbon and impact in the marine environment would be an interesting place to go. So yes, take there at the moment, blue carbon is significantly harder, or blue projects are significantly harder to do than their terrestrial counterparts. Okay, next slide. I think I've got an example of this. So to this point, the great bulk of blue carbon projects have been assessed under a thing called the VCS, the Voluntary Carbon Standard. From memory, when we looked at this database, and we did this, as I said, about a month ago, out of 24 projects that we could identify around the world, 22 of them had been done under the VCS. And you can see this is not our chart, by the way. This is one that came from, there's that, I didn't reference that. I'll update my slides to put the reference in as to where we got that from. But you can see that there's a couple of significantly large projects. There's one up here in Pakistan that has been particularly well discussed in the literature. But yes, they're all happening under VCS. Okay, let's go. Okay, this is actually a piece of data pulled by one of my colleagues at the New South Wales Department of Environment. We were looking at who it was in Australia that was actually issuing green bonds and sustainability bonds and what the terms of it are. So we pulled this data from Bloomberg. Unfortunately, on the screen here, it's practically illegible. But what it shows is that these are the Australian entities that are issuing them. There's a lot of there's companies there you'd expect to see. There's companies like banks, such as Westpac is there. There's a company here that's issuing a lot. That one is surprising. Will surprise me. That's a group called the NBN. That's Australia's Australia's major telecoms company, and they issued a green bond to presumably finance, or in fact, from memory, when we looked into it, I think it was financing using a slightly more expensive form of router that had a lower energy consumption. So it was actually an energy efficiency bank project. We've got down there Queensland Treasury Corp, so that's a government entity that has issued one of these bonds. The University of Melbourne has issued one of these bonds. So there's all sorts of groups that are issuing them. We noted there that across the total, we had found about $34 billion worth of these bonds issued already in Australia, and to the great bulk of them being by private corporations, and that on average they were on a 7-year maturity and with a coupon that was sitting at about sort of 3%. It was also interesting just to note that a surprising number of them were not issued in Australian dollars. We've got them being issued here in EU, we've got them being issued in US dollars, and then in Australia. So again, interesting to sort of just look at the companies that were doing these and what they were doing with the use of proceeds from them. This one here, Ampol, is actually one of Australia's oil or petrol vendors. So I believe that one was actually being used to fund the rollout of electric vehicle recharging infrastructure at service stations, because I think it's happening quite a lot at the moment. Okay, moving on. I thought I had, don't I have a couple more? Yes, I do. Okay, good. For a terrible moment there, I thought I had left half my slides behind. Okay. Again, I come back to my comment about different data sources show dramatically different things. I've quoted here an Environmental Finance magazine article from it was earlier this year, and the headline of it was Biodiversity Fund assets tripled in 2022 to nearly $1 billion. And you go, nearly $1 billion, $1 billion, that's nothing. We've been talking about tens of billions and hundreds of billions. Why so small? So that intrigued me, because I could actually think just off the top of my head of three biodiversity themed funds that I knew, each of which had raised several $100 million. So I found it hard to believe that there was only $1 billion there. So I went and we pulled out the underlying data set of that article and took a look through who these funds were. Now, a couple of interesting things that came out of it. A reasonable number of these funds that are being promoted or marketed as being a biodiversity fund, and the name of every single one of those funds have got the word biodiversity in it somewhere. Most of them are actually just putting a ESG style investment lens over the top of listed equity investments. Okay, so if you had in your mind, if a biodiversity fund implies that I am investing into protecting the habitat of the orangutan in Indonesia, you might be surprised to learn that actually these biodiversity funds are actually investing into listed companies on European stock exchanges, so they just happen to have a investment selection over the top of it. And you then get into this question of, well, how much biodiversity related assessment do you need to have in your investment decision making before you call it a biodiversity fund? Now, again, at this point, the taxonomies are not really developed enough to have dealt with that issue. So I guess the comment that I make to the audience is, if someone says to you, I've got a biodiversity fund, there's a series of good probing questions that you can ask them about, well, what exactly does that mean? Okay. So taking another guesstimate, this is actually based off an OECD survey, it was published in 2022, but the actual survey work turned out to have been done in 2020. So, I think it's safe to say, as an academic considerate, we would not be happy if our students took 3 years to process their survey results. And I think that's exactly what seems to have happened here. But the survey framework used by the OECD took a much broader view than that previous one from Environmental Finance. And the Environmental Finance one said, we've seen a tripling of funds under management to $1 billion. These guys had identified $32 billion worth in 2020, and there's been a lot of growth in the sector since then. So I personally found this a more believable number. So the Aton guesstimate, Aton Consulting guesstimate, given growth in other parts of the market overall, is that biodiversity funds under management on a reasonably liberal definition of what a biodiversity fund is probably actually now sitting somewhere about there. I think it's about the $40 to $50 billion bracket. Now that's on a global basis, which is actually not very big. There's a lot of scope for that to grow, and indeed I think it will grow. I would say that because obviously I'm a partner in a group that's trying to set one of these things up at the moment. So, take my bias for what it's worth. Okay, going on. So an example themed fund, this one I thought is interesting, and not just because they happen to have a lot of their staff based in Sydney. It is actually an interesting fund on a global basis. So this is a group called Climate Asset Management. It's a joint venture between HSBC and an Australian founded group called Pollination Group. They were founded in Australia, but I think these days their headquarters are actually legal headquarters are London. And they announced December 22, so about 6 months ago, announced that they had successfully raised $650 million into their biodiversity fund. Now, knowing some of the guys there, I rang them up and said, "Oh, this is exciting. Tell me about this. What are you going to spend that money on? You know, can I help you spend that money?" So there's actually an interesting wrinkle to it. So there's two funds that they are operating. One of the funds is doing a co-optimization of real assets. So what does this mean? It means it goes and buys a farm, and then instead of running that farm to make the maximum possible profit out of growing cows, it says, right, let's look at the different revenue streams that are available. I've got cows, I've got wheat, I've got carbon credits, I've got biodiversity credits, I've got, whatever else. And then very explicitly looking to choose how to balance between those different revenue streams. And since traditionally, most of these farms would have been run without looking at carbon credit offtake, at all, the likely outcome of that kind of optimization would be to reduce the number of cows and increase the amount of activity that you're doing on the farm to generate a carbon credit. So the investment thesis was co-optimization of real assets. So looking at buying farms, forestry, other real assets and co-optimizing them. And then they were offering a choice of two ways to take your return. You could either take it as a financial return. So, you invest $1 million, they go and invest in a farm, they do some clever stuff, the farm makes some money, and then they pay you some money back, and you've made, 5%, 10% return, whatever it is. And that's just the traditional way the funds work. And we all go, yeah, I know that. I put my money in the bank, I get some interest. I like that. But they also offered a different option, which was that you could get your return as a stream of environmental credits. So what does this mean? It means that, and I have no idea, who's invested in the fund, but you might be someone like, let's say, Exxon or Chevron, or a big oil company or a big mining company or something, and you might say, look, I can see that I'm going to need to have, over the next 20 years, a continual string of carbon credits coming in. And so what I want to do is I want to invest into projects that will simply pay me a string of carbon credits, or whatever they are. And so this is actually one of the options that they've offered on this one. They say, look, if you want, we will pay you back your return as credits. Whatever sort of credits we can successfully generate, we take your money, we invest that into projects, whatever credits we generate, we return them to you. Okay, now that struck me as a very interesting idea. It was the first time that I had encountered a fund specifically saying that they were going to do that. And it struck me as an interesting approach. The implication of that is that there's a certain number of investors out there, and one presumes that they are investors who have got an existing carbon exposure of some sort, who are thinking long term and saying, yes, for the next 15 or 20 years operation of this fund, I want a constant string of credits coming through to me. Now, I think that's an interesting point. If you've successfully raised $600 million from groups that have got that for you. The other thing, and this is just a tease for tomorrow's lecture, I put there one of the, since we've got a bit of a blue carbon theme, starting off from that Krungsy thing. Here's one of the bigger blue carbon projects that's around. And it turns out the Pollination Group was actually the group behind this one. So Pollination being the JV partner for this. This is a project in Pakistan. It's a mangroves project. 224,000 hectares of mangroves. And it says the project is protecting the Indus tidal wetlands. And they have generated 3.15 million tons of carbon dioxide off it. At an estimated average sale price of $27.80 US. People that are on the register as having bought credits out of that, Microsoft, Pollination Group themselves, and various other groups. So again, probably the largest blue carbon project of which I'm aware. So yes, a classic example there, I think, of the sorts of things that we're seeing, and certainly this group are looking at doing a whole series more of these sorts of projects. I know, as an absolute fact that they are only just at the start of trying to work out how to successfully invest that $650 million. Okay. Right. Last couple of comments here. So we mentioned right back at my environmental finance on a page thing. I had, all the various, we had green bonds, blue bonds, carbon bonds, and then we had equity investments, and we had screened investments, and then down the bottom I had carbon credits and biodiversity credits. So raising here a couple of things. Carbon credits, this has all flown out of the UN Framework Convention on Climate Change, the UNFCCC. As some of you are undoubtedly aware, the UNFCCC had its 27th Conference of Parties COP meeting about a year ago, and that is the overarching UN framework that's handling all things related to carbon. There is also a United Nations convention called the United Nations Convention on Biological Diversity, which is handling all things biodiversity related. And it is running along about 10 years behind. So whereas on the UNFCCC, we just had COP27, on the UNWBC, we've recently had COP15 in December of last year. Okay, so it's not automatic that it's running 10 years behind, but it roughly, it also happens to be, in my feeling, in terms of where the markets and stuff are at. If you are old enough to remember 10 years ago, you would remember that it was uncommon 10 years ago to meet someone who knew what a carbon credit was. You certainly didn't have the experience as I have had of talking to a taxi driver, and the taxi driver knows what carbon credits are. Everyone knows what carbon credits are. Biodiversity, I think, is where carbon was 10 years ago. There is now a United Nations framework about the creation of biodiversity metrics. There's a series of global agreements, and in this particular case, there's some pretty extraordinary agreements that come out of that December conference, including with a global pact to protect biodiversity. Australia, US, and EU have ratified the targets, as have a number of others. I'm not sure about Thailand's status on that. Certainly, Thailand was a participant in that conference. I don't know if Thailand had ratified the target or not, but it includes an explicit target that has 30% of land and sea under some form of conservation by 2030. 2030 is 7 years away. It's not very far away. So, I sat down and did some analysis on this. It's not very complex analysis, but by my reckoning, a 30% land target is approximately a tripling of the size of the national parks estate in Australia. We already have some quite big national parks, but it would basically triple it. That's a lot. And I noted there that 55% of Australia is under some kind of private ownership. So you're not actually going to be able to move to 30% of the land being under conservation without at least some of that conservation occurring on private land. Okay. You've then got a choice. As a government, you've got a choice. You can wield the big stick and you can tell people that they have to conserve their land, or you are going to fine them or put them in jail or something, and that's going to be extremely unpopular. Or you can give them an incentive to do it and pay them to conserve. And I'm pretty sure that's going to be the direction we're going, particularly since in the case of Australia and the United States, who have committed to coordinating policies, there is a commitment to already establish a biodiversity market. In the Australian case, they have passed enabling legislation, and the drafts of what this national biodiversity market might look like are now floating around in consultation terms. Now, because I'm the sort of guy that is prepared to try and give an interesting and entertaining talk, I am prepared to go on the record now today. In my view, the commercial value of biodiversity markets globally by 2030 will be bigger than the value of carbon markets. There it is, you heard it here first. Aton Consulting says biodiversity markets are going to be bigger than carbon markets. I don't say that just because I'm trying to set up a fund. I actually honestly believe they will be. Very good chance of it anyway. If you assume that the targets that are being set here are actually ones that people are serious about trying to achieve. So, headline note for those of you that are sitting out there, you know, if you are a young banker looking for a growth market, good place to be. Okay, I think I've got one more slide, and we're going to talk about something that's close to my heart, because I've been working on it now for a couple of years in one way or another, which is one of the few examples around the world of an actual working government-based biodiversity market, which is the New South Wales Biodiversity Offset Scheme. So this scheme was established by the New South Wales government in 2016, so that's about 8 years ago. To my knowledge, it's the first mandatory government-backed scheme anywhere in the world. Better to be proven wrong on that, but that's my understanding. And it uses a government-issued biodiversity assessment methodology. Basically, the Department of Environment was tasked with working out a complex methodology to try and work out on any given piece of land how many ecosystems there were and how many species there were on that land, and then to create credits from it. Now, when I say that quickly in a lecture, everyone just nods and goes, oh yeah, that makes sense. I invite you for a moment to think about what that implies. Right? You go onto let's say you're clearing a piece of land and you have to offset. So you go onto the government website, you mark on a map the piece of land that you're going to clear, and it does some magic behind the scenes. And it says that piece of land is the home of 20 koalas and 5 ducks and 3 snakes. And if you want to clear that land, you have to go and find someone somewhere else who is prepared to put a fence around their piece of land and conserve koalas, ducks, and snakes, and sell you the credits. Okay. Now, again, everyone here is still nodding. No one's looking nervous. And again, I think that means because we haven't quite twigged as to what this implies, right? A duck credit is not fungible with a koala credit. I can't say I'm clearing my land here and I'm killing koalas, but look over here, I've saved ducks. I have to save the exact same thing. How many types of credits do we have to define across the state of New South Wales to ensure a 1-for-1 alignment? I have a number. All right, so the answer was originally 3,500. 3,500 different sorts of credits had to be defined. Okay, it's exceedingly complex. And when you first say it, it sounds really simple. When you actually try and do it, it's actually really complex. Now, quite a process has been gone through here. It's actually down to sort of 350 types of credits, but compared to a carbon credit, where 1 tonne of carbon anywhere in the world is the same as another tonne of carbon anywhere in the world, biodiversity is orders of magnitude more complicated. And that's one of the reasons why this stuff is running behind where carbon is. This scheme has, I wouldn't say solved it. Solved it would be putting it far too strongly. but it has made a very good first attempt at how you might do this stuff. It is complicated, it is inefficient, it is expensive. Myself and my colleagues routinely pull out our hair about it, but it is a working scheme. Let's step on one more. So who runs this scheme? There are two groups that run it. The Department of Environment and Planning, so they are the regulator and policy developer of it. And then there's another group, which is also a government agency called the Biodiversity Trust, that are essentially a market participant. So they go and they put money into purchasing credits for compliance purposes and voluntary acquisitions. Turnover in that market last year was a bit over $100 million. But, and this comes back to my point, for young enthusiastic bankers who are looking for a place to work, we have just in the last few months seen a string of large private deals go through that have been outside the compliance market. So these are voluntary deals, and they are much, much bigger. I mean, one of them, Syndication Sanctuaries deal, which I will be discussing in the lecture tomorrow. We're actually going to unpack that deal and look at what they produced and what they tried to sell. On their analysis, they believe that they had $200 million worth of BOS credits sitting on that portfolio of land that they were trying to sell. Now, that would be, double the entire compliance market turnover for the previous year. I will have to say, I think the $200 million, I can see how they got it by simply, multiplying up some numbers. In an actual commercial sense, I think it's delusional. They're not going to get anything like that. But nonetheless, it is a substantially sized transaction. And the fact that we saw this one being attempted now means that there are lots of other people and lots of other bankers running around looking to see if they can buy appropriate bits of land and put them under conservation to create biodiversity credits. So insofar as I have a closing comment, my closing comment one is I'll discuss this in more detail tomorrow. So same bat time, same bat channel, come back. Dot point two, the biodiversity boom has started, is the other point I will make. All right. Do we have anyone who has asked me any question in there? I've said plenty of contentious things there. I would have thought that a few people would have arced up. No questions. Possibly I don't have any audience anymore. Yes.
They have a project like for the forestation project or the forestation project. Whether should it be the carbon credit or biodiversity credit in the future or carry?
Okay. So the question there was if I had a particular project that I wanted to do, which was a reforestation project, should I attempt to fund it using carbon credits or biodiversity credits? That's, I don't think, a very good idea. There's rather a lot of us on that screen. Okay, so it depends. We are dealing here with obviously a commercial market. So the first part of that question is, well, for my particular piece of land, what are the sorts of biodiversity credits that I might create? So this comes to my 3,500 different sorts of credit thing. Many of those credits in the New South Wales scheme have never traded, okay? And there's no price, so we don't know how much it's worth. For the ones that have traded, some have traded for a couple of $100, some have traded for $25,000. That's a big difference. So your first question there would be, well, on my particular piece of land, what have I actually got in biodiversity terms? Have I got ducks or chickens or eagles? Right, because eagle preservation is much more valuable than duck preservation. So there would be question one: what exactly have I got on my piece of land? Question two would then be, well, what actions can I take on that land to improve the biodiversity? So is it just a question of putting a fence around it to keep out the cats or is it doing active measures to plant more trees? So you need to work through, all those things. So you get to the end of all that, and then you can make an assessment about what the value of the portfolio of biodiversity credits would be. And then obviously you compare that with how much carbon do I think I've got there. Now, all that said, that syndication sanctuaries deal, as I said, come back tomorrow to learn about that in detail, but here's the headlines of it. They spent $12 million to buy the portfolio of land. They sold $15 million worth of biodiversity credits off it 2 years later. So they'd already fully paid for the land and they put the whole thing under conservation. And they still have, according to their argument, and as I said, I think they're wrong, but according to their argument, they've still got hundreds of millions of dollars worth of credits left. So to answer your question there, if I had a deal like that, the answer would be biodiversity credits by a long way. I'm not, as I said, I wouldn't hold that forward as a particularly replicatable deal. I think there were some unusual things about that. That particular piece of land happened to sit right next to a national park, and that improved the biodiversity value because you were connecting areas of land that were under conservation. And there were a couple of other interesting things with it. But yeah, the point being, you can certainly fund substantial private conservation under biodiversity credits in New South Wales. And I think you will shortly be able to do that nationally, and you will probably be able to do it internationally as those frameworks work their way through over the next 3, 5, 10 years.
Yes, my question is about blue carbon projects. When I look at the world map you showed, I don't see the Great Barrier Reef.
No. Would you care to, can you find me my map showing of Australia? Yes, you're quite right. There is no blue carbon project on the Great Barrier Reef in Australia. That, for the record, that's sort of on that arc of Australia there. Yes, this is true. Look, these projects, the current assessment methodology for that is available under the voluntary carbon standard under VCFs essentially covers mangroves and a couple of other things, right? It doesn't actually cover coral reefs. So to my understanding, the great bulk of these blue carbon projects actually relate to a very small number of particular plant types that happen to be available under the existing VCS standard. Now, that said, clearly protecting carbon or biodiversity on a major reef like the Barrier Reef in Australia is a very good idea. Bonne idée, as they say in French. The government of Indonesia actually has got a project that they're running at the moment in conjunction or part funded by the Global Environment Fund, GEF, which is a United Nations World Bank fund. That project is related, at least in part, to coral reefs, and I believe they are working on developing methodologies about how to assess the carbon under that. So, yes, for the enthusiasts who would like the opportunity to create a blue carbon project on a reef, the day for that is probably coming, but it's not defined yet.
Thank you.
Okay, any other questions? Please give some examples of electricity power industry applied green bonds and biodiversity schemes in Australia. Okay, thank you very much. Right. Could we please pull up on that list of, I had a table of bond issuances in Australia. It was a big, impossible to read list. No, not that one. No. Forward. Where are we? Keep going. No, I think we're going the wrong way. Let's try the other way. So I'm looking to, it was a big spreadsheet, like it looked like I clipped it out of Excel. It looked like I clipped it out of Excel because I had clipped it out of Excel. That one. Thank you very much. Okay, now on this list, there's at least one tower company. Need to find them. Where it's almost impossible to read. At least two power companies, actually. Okay, I'm struggling to read that, so I can't see it there, but there is at least one. The other one that I would mention on that list is this Ampol transaction, which, as I said, is a Ampol is actually a petrol company. It's a bit like a PTT, large network of service stations all across Australia. That green bond is used for financing a rollout of, from memory, 300 fast chargers for electric vehicles. So we're certainly seeing power companies that are issuing green bonds for the financing of solar, solar farms and electric vehicle recharging infrastructure. It's certainly happening. The best example I can think of from the power sector, and it's only obliquely to the power sector on biodiversity, is the Whitehaven coal. So Whitehaven coal is a coal mine in the Hunter region, from memory, in New South Wales. It is primarily a mine that is supplying power to providing coal to the local coal-fired power station. And they have actually participated in the New South Wales biodiversity offset scheme to generate biodiversity credits to finance the mine rehabilitation. So in other words, they had a section of the mine that had now been mining had been completed, and they wanted to rehabilitate that area and replant it with native trees and things. And they were able to finance that under the New South Wales biodiversity offset scheme process. Now, again, one of the slightly quirky things there is, of course, that one might argue that putting trees back on top of a mine when there were trees there to start with is actually not a net improvement in biodiversity. After all, the trees were there, then you mined it, and the trees weren't, and now the trees are back. Not exactly a net positive. The argument there being that the mine had been there for many years. The mine actually predated the start of the offset scheme, and so hence in terms of where the baselines were set, it was eligible to create credits under the scheme. Off the top of my head, those are the best two examples I can think of. So bonds for the petrol company to finance electric vehicle recharging infrastructure, and Whitehaven coal for the mine rehabilitation project. I'm sure as soon as I walk out of here, I will think of a perfect example for that. Feel free to email me, and I'll see what other examples I can find. My pleasure. Any other comments or queries?
It's somehow as a boom for the environmental related bond, like the green, the blue, and the sustainable green bond. So that everyone is trying to classify into that type to make it sexy for investors. That is the first one. And
Yes.
when we thinking about that, the verification and the companies that verify those taxonomy, which is still unclear among them. Who's take the role in that verification process?
For those that are online, I'll do my best to paraphrase that question. So question one being this large surge in green bond issuances. Are we simply seeing things that would have been issued anyway and are not actually all that green? The other then being around who's actually doing the audit and verification on the taxonomy. So the first one of these is easy. Yes, absolutely. Okay, easy answer. As I mentioned, and to take that example of the New South Wales government bond that was issued for building schools, I think it's safe to say that 10 years ago they would have issued a bond to raise money to build schools anyway. It just so happens that because of the taxonomies these days, you can call that social infrastructure, and therefore you can call it a social bond. Now, is that illegitimate? No, I don't think it is. I mean, it's simply saying this particular bond is, has these particular things in it. So it's a bit definition, right? So yes, you're quite right. Lots of bond issuances are now occurring. They're being labelled green because the use of proceeds fits under the taxonomy. And that makes it look like there's this enormous upsurge in bonds being issued, whereas actually what it probably really is bonds that are being issued anywhere being identified. I don't have a problem with that. It's not fraudulent. That's just people labelling things because now the labels are available. But yes, absolutely it is. Okay, item 2 there was who is doing the audits of the taxonomy. Now this is where I come back to the point I made with that EU taxonomy and how they were explicitly saying if you are operating in Europe and you are going to be issuing a fund that claims to be ESG or claims to be green in some way, you need to apply the EU taxonomy, and it then becomes monitored by the financial regulator in the same way that every other claim you make as a fund is monitored by the financial regulator. Okay? So I think that is the way of the future. I'm expecting to see that a lot of these sorts of things become part of financial services regulation. The TNFD, which again we'll discuss in detail tomorrow, but it is going that exact same route. There is a forum for international financial regulators and international reserve banks, the name of which immediately escapes me, but that's the forum where all the regulators sort of try and agree global standards about things, and they are already discussing what role the TNFD will play in disclosures around financial risk on a global basis. So I expect to see most of this stuff moving away from departments of the environment and moving into departments of financial services, right? Because once it becomes a financial product or financial service, I hesitate to use the financial product, that has a legal meaning. Once it becomes a financial instrument, you expect to see financial regulators getting interested about it. Now, who actually does the monitoring and verification there? Because you may suspect that the average financial regulator is not well placed to assess how many ducks, chickens, and koalas, went into that biodiversity bond. I expect to see a great amount of consulting work for groups like PwC and KPMG and all these big sort of financial audit compliance firms to do that sort of thing. There's been quite a substantial number of small companies that have moved into that, sort of smaller companies. Engineering groups have been quite active in doing that kind of work. Environmental consultancies have been quite busy doing that sort of work. So I think all those guys are going to get a piece of that puzzle. But yeah, the high level thing, I think we're going to see a lot more of the weight being carried on the financial regulator side. Okay. I'm sorry, there were a couple of questions there. Could I scroll back up to the one from Kun Carl? He said something about hello to a fellow Australian. Yes, a bit further up so I can read all of Carl's message. Carl's, for the record, always ask good questions. Okay. I'm sorry, is there something above that I didn't get before? Okay, so let's go for, I'll start with Daniel's question. Understanding green bonds to support compliance to environmental conservation. Comes to finance, is there any national government role or finance ministry dealing with environmental finance? So look, I think we just touched on this a moment ago, which is that yes, like it or not, financial services regulators are finding themselves pulled into managing this area. It's not something that they're naturally comfortable with. But it has to be said, departments of environment are also naturally uncomfortable dealing with these matters. So to take a classic example, this New South Wales biodiversity offset scheme that is run by a Department of Environment, you know, they were not very comfortable when I said during one of our meetings, well, look, we've just seen this transaction for $200 million worth of these credits go through. What's that going to do to the market? Do you view your role as being managing a well-functioning, efficient market? Are you actually a market operator? And of course, for a Department of Environment, to be asked, are you in fact a market operator, is very much an out-of-area experience. So they sort of said, well, that doesn't sound like us, but it's not clearly anybody else either. So this is an area of evolution that we're going to see happening. I do note in the proposed Australian nature repair market, this is the national biodiversity scheme that's being proposed. In that case, they are explicitly stating that the instruments that are generated are going to be regulated by the Australian Energy Regulator. I think, or the ACCC. I'm sorry, I'm having a mental block on exactly who they said, but they did explicitly say there's a particular regulator who's going to have to pick up the job of monitoring this stuff. But yes, look, I think Daniel, that's an extremely good question, and certainly for anyone online who is sitting in a government department looking at this stuff, asking the question, if I set up a market for something, am I actually equipped to run a market? Is a very good question. So yes, thank you for that. It's an excellent question.
Thank you so much.
Okay, Carl Goodyear, fellow Australian, lived more years in Thailand than Australia. Fantastic. By the way, I first worked here 30 years ago. I actually worked with EGAT, oddly enough, back in the mid-90s. So always a pleasure to come back. Company looking to commercialise and launch a design related to bio-waste conversion. How to identify which banks, bonds and investors are aligned with what we do. Okay, so this is always the hard question, isn't it? You know, you've got a brilliant idea. You know that at least some investors out there would love to invest into your idea or into your products. How do you find them? And I regret to say that there is no clear registry that's kept out there for this. The obvious place to note, though, is to go and look at the institutions that are issuing these sorts of sustainability or bonds or linked bonds, because the problem that they've got, and you know, someone at Krumsi has got this problem today, and it's a very nice problem to have, which is I've now got $200 million that I've promised my investors I'm going to invest into, nature positive, projects. Now I have to go find the projects and actually invest into them, which is much easier said than done. So look, I'm sorry, Carl, I can't say to you, yes, there's a website here that's got a comprehensive list of all these things. Although that page we've got up there at the moment showing the Australian issuance of green and sustainability bonds, that's a simple dump out of Bloomberg showing what bonds are on issuance, and that's as good a guess as any. But go and start looking for the people that have issued bonds and therefore have got money burning a hole in their pocket. Okay, I hope that helps.
You have the last
Okay,
last question from Ronaldis, and we will
Okay, Kun Bun did, and then Kun Sinarat tells me that I'm allowed to stand down. So, Kun Bun.
When I saw your picture on bees and pollination, it reminded me of a research group here in KMUTT. They have a international reputation on research into native bees, and they helped local communities produce bee products. I wonder if biodiversity markets would come into play in this case. Any chance?
Well, actually, yes, I think they will. Look, pollination group, and I know a number of the guys there reasonably well over the years. There's some very high profile and very successful people that created pollination group. They chose that name because the collapse in bee populations around the world is a very concerning and very explicitly known environmental and biodiversity problem. Sometimes when I'm talking to people and they say, look, I've expressed my enthusiasm around raising money into biodiversity funds and stuff, and they sort of say, well, look, is there a real problem? The answer, at least for those of us that are over about the age of 40 and grew up in Australia, is you say, well, look, do you remember getting in the car with your parents and going for a drive in the country, and when you got out of the car, the windshield would be covered in dead insects, right? And that doesn't happen anymore. When I go for a drive in the country in my car now, my windshield is clean. The insects are gone. The insects are gone, right? You only have to stop and think about that in the space of one man's lifetime to get a sense of the extent of the problem that we're dealing with here. So look, bees as a microcosm of the broader issue of collapse of insect population, absolutely, they're going to get money from biodiversity credits, and I would be delighted to try and work out a way to do it.
Yes. Next time when you're here, I will show you what they do.
I will look forward to it. I like the implication, by the way, Considerat, that there will be a next time that I come back here. That is good. All right. Well, look, I think at that point, if no further questions, we might declare. Did you want to say any closing words? Okay, well, I will pass over. So, look, thank you again, everyone.
Okay, thank you, Carl, for the very interesting 2 hours with the relatively new but fascinating information about the Thai growing environmental finance sector. So I also would like to thank everyone who is online and on site joining this interesting lecture. And don't forget, we have tomorrow the other 2 lectures in the morning and in the afternoon about the TNFD, so you know in more detail what it is. And also on Thursday, you will also learn about how the energy is also related to this environmental finance, I guess. Yeah. And so thanks again. And before you quit the meeting, could you please evaluate our webinar by scanning this QR code, or we also have the link here. Okay, so have a good evening and see you all again tomorrow. Thank you. สวัสดีค่ะ